Good afternoon, you guys. Welcome back to the channel. Today's the 30th of January. What? January? What? It's December 2024. Tomorrow's New Year's Eve. So, which is really, really fun. Hope you guys are having a ball at whatever that you're doing, wherever you are. In today's video, one of you guys asked me a question as to how do I use these trend lines to trade? So I wanted to answer that and to also give you guys a few tips along the way. When I analyze the charts, you guys know I start with my monthly chart, I come to the weekly, the daily, the 4 hour chart, and then I stop at the 1 hour chart when it comes to drawing the trend lines. So once I reach the 1 hour chart, when it comes to drawing trend lines, I literally just I stop. Okay? It's literally. I don't go drawing trend lines in the 30 minutes, the 15 minutes, the 5 minute, the 1 minute. I do not draw trend lines based on those charts. I draw trend line based on a 1 month chart up until the 1 hour chart. Once I get to the 1 hour chart, what is going to happen is I am going to wait for the chart for the price to move close to my trend lines. As you can see here with recent price action, this price action is going straight to my trend line. I'm expecting price to reach this mark here, create a reversal candlestick, move back to the downside. If it breaks out of that trend line, then I can go on with it. It broke out, it's going further up. Then I'll go further up with it. So, to wait for the entry for my trades, I prefer to go to my 5 minute chart. Once I've reached my 5 minute chart, you guys, I am looking for a reversal candlestick, something that will show me that, hey, we actually tired of going up. Now we are going to go down. All right, let's let this work its magic and then we'll come back to see what it has actually done. Did it decide to go down? Did it decide to go up? What candles did it create? So for now, we'll go back and back test our strategy, right? We are looking for multiple touch points. Remember, we are looking for multiple touch points when it comes to our trend line. So, when it comes to this pink trend line here, this is our 1 hour trend line. The price hit this trend line. Let's just adjust here. Sorry about there. Yeah. We have one touch point, two touch points. One touch point, two touch points. Two of them, not almost touch points, but actual touch points. Two of them, the market went up like crazy. You could count this as three. You could count it as a three touch point, but I prefer to say it as a two touch point. The market went up like crazy. Went up there, bounced back down. When it went back down, for me, that is my third touch point. Look at that. When we come and analyze this third touch point, what we are looking for, we're looking for a candlestick that actually saying that this is all going to the upside. Okay, so this candlestick right here, the red one, made it as if now it is going down, but it did not break out of the candlestick. And as you can see, it did not even touch exactly the candlestick, but it is close to the candlestick. Because it is close to the candlestick, it does count as an opportunity to get into your trade. So you are going to enter based on the fact that this candlestick here closed more than halfway of this other candlestick, giving you an opportunity to go up with the trend. So you're going to enter into the trend, into the market with this candlesticks right here. Put your stop loss around below the trend line. Go up with it. Whether you're going to take 1:3, 1:5, 1:10, it is at your own um choice. You can choose to do whatever that you see fit when it comes to that. That is your third touch point. You got into the market. So that's how you use a trend line, you guys. You wait for a touch of that trend line and then you get into the market. That's how you use trend lines. And then here is another one. A touch. Now this one touched the trend line perfectly and it created some reversal candlesticks. Can you see this one? This is the bearish reversal candlesticks. It was as if it's going to push to the downside, but it did not break out. You don't put in a trade. Yeah, it looks like it was, but it did not break out. It just created a reversal candlestick going down, whereas it did not pass to go to the downside. So eventually it created some two reversal candlesticks to the upside where it pushed even further and went up and gave you guys, I don't even know what kind of risk to reward ratio this one is, but like it paid up bigs. Just say you got in at the close of that candlesticks right there. No, that's not the one. Oh, my bad. I'm just trying to time it nicely so that okay, I'm just gonna leave it at that. Um, and then look at the risk to reward ratio that you could have made on this one. That is a 1:3 right there. More than 1:3. More, much more than 1:3 here. This could have been a game changer trade right here. Look at that. Look at that. Look at that. And your stop loss doesn't even have to be that far. Your stop loss can be around this mark here. So that is a 1:8, you guys. 1:8 trade at that moment. A 1:8 trade that gives you an opportunity to actually kill the market, basically. I'm not supposed to say those words. No. This is an opportunity to actually smash the market. Take as much pips as you can imagine. So the main thing I'm trying to say, this is how you use a trend line strategy. It's extremely simple and extremely difficult at the same time because when it comes to trading, guys, you just need to put the trade and see where it takes you. Just don't over risk so that when you lose, you don't cry about it. Okay? So yeah, I'm gonna look for an example where the trend line actually breaks out. Here we go. So this trend line was followed. The thing is, I cannot go back too far. This trend line was respected two times, multiple times actually. Just to go back, I can't go back further. It's not allowing me to. Okay, so it has had multiple touches. This daily chart trend line has had multiple touches, and it came to a point where it got broken out of. Yeah, now the trend, this candlestick here that broke out of this trend line is a beautiful full candlestick that shows power to the downside. Tried to go back, but as you can see, it was pushed to the downside. So that is an opportunity to enter a trade at that moment. Put your stop loss here, or you can put it there just to be safe. And then the market went down and went some more down. You could have benefited from this trade just from that breakout alone. The market decided to consolidate for a while, decided to break up to the upside. And when the breakout happened here, also, the market decided to have some undeciders, candlesticks, undeciders, and then eventually had a full candlestick showing that there is power to the upside. You can put your stop loss right here or right here, and then continue with the market to the upside also and benefit from those pips again and get out of the trade. Remember, guys, another thing, you must not be too greedy and think that the market will go indefinitely to the upside. Just don't ever imagine that happening where you go indefinitely. Decide how many pips do you want to take out of the market. If you're a day trader, try sticking to 30 to 50 pips. It's a lot. That is a lot of pips if you know how to handle your risk to reward ratio. 30 to 50 pips. This thing of imagining 100 pips profit from a trade is honestly it's very dangerous, because when I started, honestly, I thought, hey, I must push for 150 pips, yeah, 200 pips. Wow, especially if you see YouTubers making videos like I made a 1,000 pip profit trade. You're like, wow, that is amazing. How did you do that? But guys, that's unnecessary. It's unnecessary. This one would have been a bit of a loss, because you would have entered maybe on this one and said it would close the bar. It engulfed this other trade, this other green candlestick, and it had a big breakout. This candlestick is so big that broke out of it, it could cost you money. But okay, let's say you put that trade here and you say you put your stop loss just above your breakout candlestick, and then you go to the downside. If you wanted to risk a little less, you would have put it here and you would have been stopped out. Okay, let's say you put it here and you have enough capital. This trade could have been really beneficial for you as well, because it went down. It did not play, it went down. So that is it, you guys. That is it. It is as simple as that to trade with trend lines. Because someone asked, how do I trade with these lines? That's how we trade with these lines. Okay. We wait for a breakout, we wait for a reversal. That is it. And we wait for certain confirmations of candlesticks. We are still going to cover how to actually know what type of candlesticks that should come out of the trade, how to navigate candlesticks. We'll learn more about that as time goes on. I will make a video on that also. And yeah, guys, that's it. I hope you guys enjoyed this video. I hope this helped you guys a little bit, at least, even if it's not a lot, but a little bit. I hope it did um help you guys, and yeah, change your mindset when it comes to trading. Remember, don't take a lot of pips out of the market. Aim to take pips that are enough for you. Okay, if you have a small account, it's okay even if you make $5. It's okay even if you make $2. Okay, you have a small account, it's normal. Aim to take profits. That's the whole thing, is to aim to take as much profits as you can take out of the market, and that will give you the best results ever. Okay, thank you guys for watching, and I'll see you guys on another one. Happy New Year again. So I'll say this every day before even New Year's. Yeah, it's almost New Year's Eve tomorrow. I don't know if I'm gonna post or not, but I will try to. Yeah, or I'll guess I'll just see you guys next year if I don't get to post tomorrow. All right, see you guys on another one. Bye.